Welcome everyone to today's webinar. Paul, how are you? I want to just make sure you can share your screen here. You should be able to do that now.
Hey, I'm doing great, Liz. Good to see you again.
Good to see you, Paul. As always, Happy New Year.
Same to you.
Is that appropriate that we can? I'm going to actually share a few slides really quick before you share your slides, if you don't mind.
Absolutely. Yeah, I'll be ready when you are.
But welcome everyone. As we get started, I just wanted to let me see here. Yeah, if you don't mind, do you mind unsharing? And then I don't know how that works.
If I can figure out how to do it, I will.
I hear you.
Mistake. Okay, got an engineering degree. That was my first mistake. I saw the recording just started again. After selling a company to a public firm in 1997, I started thinking, hey, I'm a full-time investor now. I thought I was pretty cool. And you know what? I really wasn't. I was very not cool. I was a full-time speculator is what I was. And I didn't know the difference between speculating and investing, and made a lot of mistakes, lost a lot of money. Matt, Liz, your husband, was on the How to Lose Money podcast with me, I believe, many years ago. And we talked about pain, failures, loss on the way to success. And I think that is the best way to get there, to learn lessons from our pain and failures. Quick disclaimer, you can look at this slide later if you like. I've written a couple books, one humbly titled The Perfect Investment, about multifamily investing. And then I wrote a book that Bigger Pockets was kind enough to publish on self-storage. So before we jump in, I just want to cover something that's really fun. So I was a residential real estate investor, did about 60 or 70 house flips, 20 or 30 waterfront lot flips at Smith Mountain Lake in Virginia. And while I was a residential investor, I did not know the power of commercial real estate investing. And I want to use an analogy to explain that, just kind of hit this and start here. Jeff Bezos, one of the wealthiest guys in the world, started Amazon, obviously. Did you know he took all the lights out of the vending machines in all his factories and all his facilities around the world? He took the lights out because he didn't think it made sense to advertise Lance snacks and waste all that electricity and waste the manpower to change the light bulb and waste, the light bulb, all that stuff. He cuts costs because he knows the power of a dollar. The power of a dollar for Jeff is $1 a month saved is $12 a year. I'm pretty good at math. And that $12 a year goes to the bottom line, and it's multiplied by the price to earnings ratio. And that $12 a year comes out to be over $1,000 in the shareholders' pockets, at least in the stock value. And it's very similar in commercial real estate. Residential real estate, as most of us know, is based on comps, comparable properties. Residential is great, but commercial is based on math. And this is the formula: value equals net operating income divided by cap rate. And I think you all know that. But I just wanted to affirm you by saying you're in the right place if you're investing in commercial real estate, because you can do things to add to your net operating income and then raise the appraised value. This is kind of how it looks. We talked about a dollar. So a dollar saved or earned in monthly net income is $12 a year. You divide that by a 6% cap rate, for example, 0.06, and that's $200 in additional value at the asset level. So a dollar a month turns into $200 in value. But if you're an investor and they're using debt, let's say 66.6%, 2/3 leverage, that 200 impacts you 3 times as much because of the debt involved. And so what I want to do right here is just talk briefly about the power of a dollar in commercial real estate. I'm going to go through the math, and then I'm just going to buzz through these so we can get on to RV parks. So let's say you have 15 vacant apartments, and let's say, $825 a unit. I guess that's Class C, 1 bedroom. Anyway, if you can fill those, that's 15 times $825. That's $12,000 a month. That comes out to about $148,000 a year. Divide that by 0.06, the cap rate, and you get an additional value of $2.475 million. So if you can buy buy a 100-unit apartment building and it's mismanaged and you can fill 8 units, or excuse me, 15 units, you can raise the value of that theoretically by over $2 million. It's very powerful. Or save $35 a month on water bills. Multiply that by 125 units, that's an $875,000 value. Or lot rent at a mobile home park, just raising it 5%, 300 spaces, that's 900,000 additional value. Or even negotiating a cable internet deal, that's worth $600,000. Outdoor storage. I know somebody who had a mobile home park. They added a fenced area, a paved area, and they over an acre. It cost them $120,000 or so to do. They added $9,000 a month to their bottom line. That's $108,000 a year. That's $1.8 million in additional value they added. So here's some more examples. U-Haul, that's $600,000 added to the value. Point of sale items at a self-storage, that adds $200,000 to the value. Insurance at a self-storage facility. And I want to end on this one, RV pads. Imagine you had an RV park with 100 pads and it was going really well. There was a lot of demand. Let's say you could buy the neighboring farm or forest land and add 100 pads. That might cost you, for example, $20,000 a pad. That's about $2 million. That's a lot. But listen to the value, and this is pretty amazing. 100 RV pads times $100 a night with a 50% annual occupancy rate adds $1.8 million to your net operating income. That almost pays for the cost of those additional pads, in my example at least, in the first year. Divide that 1.8 million by 6%, you've added potentially $30 million to the value of your park. And by the way, I'm not saying RV park pads are magic and they're any different from multifamily, self-storage, or anything else. I'm just saying that's just an example, because we're going to talk about RV parks today and talk about the possibility of even adding 100 sites. This is just a fun little slide overviewing some of the RV parks we have invested in. So why do we love RV parks? And why do I, by the way, think that RV parks today are about where self-storage was in the mid-90s? And of course, I can't prove that because nobody has a crystal ball. But I think RV parks have a lot of exciting factors going for them that make me want to invest more. So far, there's rapidly growing demand that far exceeds supply. We'll get into that in a minute. The pandemic accelerated this long-term trend that was already, in place before that, and it just significantly accelerated. It's a highly fragmented industry, a ton of mom and pop owners, which make a great opportunity for a professional operator to go in. It's recession resistant. Notice I didn't say recession proof. Provides safe and affordable vacations, and that can even be a benefit during, downturns when people can't afford to drop $5,000 at Disney. They might be able to afford to go to a nice RV park. They've got a long runway for growth. There are significant barriers to entry from doing it at least the way that I'm going to propose today. So here are a handful of facts about RV parks. RV ownership, grew 62% from the beginning of this century. Isn't it fun to say that the turn of the century, but just mean like 20 years ago? A record 11.2 million US households own an RV, but check this out. 9 million or more people say they want to buy one in the next several years. Doesn't mean they will, but there's a demand. And we're going to get back to that. Get this, 26%, over 1 in 4 RV campers were new in 2020 during the pandemic when a lot of people were hiding in their basements. People were out with RVs. The rate of new 2020 campers grew by 5 times the record pre-pandemic rate. Over 6 million households started camping. That doesn't mean they own an RV, but they started camping just in that 1 or 2 years. Now, a study showed that RV camping is more cost effective than traditional vacations, 47% less than a comparable car hotel vacation, and 62% less than a similar air and hotel vacation. And you can imagine that. Online searches for RV parks have doubled, and RV parks have experienced continuing growth. They did continue growing during the great financial crisis. And I want to show you now. I don't love this slide. It shows what happened during the great financial crisis. It shows apartments, office, industrial, retail. But it shows that of those 5 types of assets, it doesn't show mobile home parks, unfortunately, but of those 5, RV parks are the only ones that never had a year where they contracted. In other words, their growth rate decreased in 2010 and 2011, but they were always growing. They were always above that red line. I don't love the slide either. It's kind of blurry, but it just shows the increase in campers. And look at that bottom line in 2020, the number of total campers, 48 million in the US. And, you can see that especially that green bar in the 2020 slide during the pandemic, it grew more than the others because that was one-time campers. It went up from a record no, not a record. I was wrong, but around $5 million in 2019, up to 13 million in 2020. Now, we said that 9 million people want to buy an RV. That's probably not going to happen because I don't have 2023 sales yet, but historical RV sales have capped out at around 600,000. I think that's the capacity of US plants. And so that means there is a difference between the number of people who want to buy an RV and who want to camp and are camping, and the number of people who can or do, especially at these high interest rates. And so today we're going to talk about how that is solved. And it's kind of cool for RV park investors. This shows that there was a shortage of RV park spaces even before COVID. This shows what people did to find a campsite in 2018. Some people said, I stayed on weekdays instead of weekends. I decided not to go at all. I parked at a roadside rest area. I changed the dates of my trip. I went to a hotel or motel or cabin, etc. So there was already a shortage. And I can tell you, with 2 RV owners on my street, one of those real high dollar Winnebagos next door, and then another one down the road, they say it's very hard to get great spaces at nice parks now. Today, I talked to a potential investor who's been on the road with their RV for 8 years. And they said that the prices of the same spaces have skyrocketed in the last several years. And obviously, that's good news for RV park owners, not great news for RV users. I always assumed that gas mileage was really bad, and it's not great in RVs, but my Toyota Sequoia gets like 12 and a half miles per gallon in town and 17 and a half on the road. Well, honestly, these motorhomes are not much different. You can see here that the Class A, B, and C, they generally, get similar miles per gallon to a Toyota Sequoia. So that surprised me. I mentioned earlier, no, I didn't mention earlier. Now I'm going to mention, that we are at a first in world history. This is the first time I think all of us can confidently say that a lot of people realize they can work remotely. Amazingly, 35% of workers now believe or can work remotely full time in the US. 23% can work part-time or occasionally remotely, and there's 42% who are tied to their job, their job location. So that is a lot of people, 92 million people who could work remotely. And think about it, during COVID, what did we learn? Well, we learned we could work remotely, but we also learned, hey, you know what? I really want to prioritize my family. I want to prioritize my life. I don't want to stay chained to this desk and, on Wall Street. And a lot of people have moved. I live near Smith Mountain Lake in Virginia, and there are a lot of people still to this day moving here in droves who say, hey, I can work remotely. I got great internet here. I got great cell coverage. I can work at my New York or Chicago job remotely, and they are. But a lot of them are hitting the road as well, like my friend Chad. Chad's the CEO of a startup, and this is a rig he purchased for, I believe, $38,000. He's here in Roanoke, Virginia. And he bought this rig and he outfitted it so he could work on the road. Check this out. He's got desks that drop down on pulleys from the ceiling. He's got two desks, two people can work there, and they work on the road when they're parked, of course. And then when they want to hit the road again, they pull those desks back up, they pack it with their dirt bikes, and they hit the road again. And Chad is somewhere between Utah and Florida, last I heard. So, um, he basically lives in an RV, and we know somebody else. So we just went through the Christmas season. We know somebody else who lives in an RV, right, Liz? Good old cousin Eddie, right? Don't you go falling in love with it. Okay, my wife said I shouldn't put that in here. Sorry. Anyway, there is another factor that I hinted at earlier that is making RV park demand even higher. And it's pretty cool. It's the sharing economy. Think about the impact Airbnb has had on the hotel industry. This slide is amazing. Marriott's been around for 97 years. Airbnb is basically just a baby company. They've been around like 16 years now. Look at this. Airbnb has like 4 times as many rooms as the largest hotel chain. And the impact they've had is incredible. But it's not just Airbnb. I mean, we also know that Uber has become like a verb. Think about car rent. There's car rentals. Turo. I rented cars on Turo. There's boat rentals, tool rentals, and even clothes sharing. That's right. Toolery, right? Um, well, RV sharing has become really popular and it's getting more popular as well. And I think it's got a special window because, you know, I if I go to Minneapolis again, I might rent a Turo, or I might just rent a car, or I might just take an Uber and not even need, I said Uber, see, I might not even a car, might not even need a car. But for RV parks, RVs, it's a little different. I don't want to buy an RV. I don't think I would use it enough to make it worth it. And so for me, these sharing platforms like RV Share or Outdoorsy make it really, really powerful. And there's other enhancements like a company called Wheelbase I'm going to tell you about in a minute. But think about it. Now, millions and millions, tens of millions of people can use an RV that don't own one. And think about the impact. The impact on the RV parks is massive because those RVs that sat 49 and a half weeks idle a year are now put into motion and they're used. They could be used 10 or 20 more weeks a year. You all know Whitney Elkins Hutton, I believe. Whitney bought an RV in Colorado. I believe it was 2 years ago. She leased it out for 6 months the first year she had it. And she retained, after all expenses, she made 50% of the cost of that RV back in the first 6 months of renting it out. So, hey, it might be an investment for some of you as well. But I had a lot of concerns before I wanted to rent an RV. I mean, what if I get an accident? Well, how do I get insurance for it? Can I even get insurance? What if it breaks down in a remote location? Um, I'm intimidated about driving a large rig. Speaking for my wife, of course. I'm concerned about the setup of an unfamiliar RV. Well, again, my dear wife is concerned. um, I'm not mechanical at all. I don't know how to even tighten my own doorknob. I admit it. Okay. So how do I avoid a hefty fuel bill? I mean, all these things are questions. Well, Wheelbase, RV Share, and Outdoorsy have solved all these problems. They give you insurance. They have 24/7 roadside assistance. They'll even set up the RV for you, and you can just show up in your car or Uber at a location. So pretty cool. I'm going to breeze through this for time's sake. There are 4 types of RV parks that I've been able to identify. First is overnight and campground parks. Second, extended stay, workforce housing, and destination parks. So, um, overnight campground parks. So these are just places where you're on the way somewhere and you just need to spend a night or two. It's light on amenities, but it's really close to a freeway. And, you can see here, not much on amenities. Extended stay parks. These are kind of like where you permanently place an RV. You might build a deck around it. You might, put a shed up even if you have room to do that. And a lot of people, these include snowbird properties in the southern US where people rent by the year and they literally pay a year in advance, which is pretty cool. A lot of these, from what I understand, have 5, 6, 7 year waiting lists. So that's another option. If this isn't familiar, maybe this picture will help. You can see by this lake here, these people have decks, they have awnings, they're there to stay. And that's the extended stay RV park model. A third type, which is kind of um, unusual, is workforce housing. It could be oil workers, construction workers, travel nurses, engineers. And I just want to show you this fun picture. This is an RV park in North Dakota where I built multifamily a decade and a half ago. This is an indoor RV park because it was so cold there. That's workforce housing. The fourth type is destination. There's 2 types of destination park. One park that's near a great destination like Yellowstone Park or Disney, and another type of RV park that is the destination. And that's a park that we're going to talk about a little bit today. These have pools and water parks, face painting, hay rides, gem mining, and even Wibbits. Silence. Okay. Anyway, that was a joke, but it's true. So these destination parks, this is one in Leesburg, Alabama, that we invested in. And you can see it has a lot of land that's unused to the right of it there. They purchased that land. And once they build out all these amenities and got everything online, now they're expanding over into the right and actually to the left of this as well. That's a pretty cool model. I mentioned Wibbits just for fun because I like to say the word. This is Wibbits. This is a park I visited in Fort Worth, Texas. And what they do is they spend about $500,000 by building a 5-acre lake and a beach. And then they put these floating obstacle courses that cost $200,000 to $300,000 more. And they rent these out to kids and adults for like $17 an hour. Well, by doing that, they're actually this value add, these Wibbits add, something like $1,000 an hour to their income in the high season. Now, one thing you can imagine with all these amenities is it's not easy to run. It's not something you could do passively. It's not even something that you could do. I mean, it's running a major business. It's not just real estate. So think about that as you think about, potentially making an investment. This is an operator we like. I'm not going to spend much time on this. The VP of this operator, we like this operator. And one of the reasons we invested with them is their operations manager grew up. The lady that makes this work grew up in an RV park, and then she's been overseeing RV parks nationally for about 22 years. And so because of her experience, we actually invested with this operator. They buy off market, they expand a lot, they add a lot of amenities, and their cash flow projections are quite high, though, as you know, there's no guarantee that those will come through. They're projecting, IRRs in the 20% plus at a 7.5% cap rate. So, see, these are some of the revenue enhancement opportunities at one of these destination parks. They can expand the number of sites, which we talked about. They can use dynamic pricing for their rates and, get occupancy up. They charge resort fees. They have park models, which are, in place RVs that are already set up for people. Where this is really cool is if you rent or own an RV and you want to take extended family or friends, they can, they can get a glamping model, which is, glamorous camping, or a park model, or take a tent and they can join you or join you in a cabin. And anyway, some of the other expansion or enhancement opportunities are golf cart rentals. Some of these golf carts rent for more than the tent sites, and people don't even complain about paying $75 a day to have a golf cart to tool around in. There's dog pens. There's site lot fees. There's limited food service. There are wedding venues. Um, the place I went had hay rides, gem mining, t-shirt painting, face painting, had a kind of an outdoor theater, a movie theater. They had a screen there. People could, sit in their lawn chairs and watch movies. They had very good internet, very good cell service, which is critical. They had a putt-putt golf course or a mini golf course at this place that I went. So a lot of fun amenities that can be added at these destination parks. This is a picture of one of the parks that have some expansion land next to it. The operator that we are investing with, they are looking for destination family-oriented parks. They're looking to be within 3 hours of very high population centers. So Leesburg, Alabama might sound really remote, and it is, but it's only 2 to 2.5 hours from Chattanooga, Atlanta, and Birmingham and other large cities. Um, these destination parks, like I said, there's a lot involved in running them. There's also a whole lot involved in getting them up to speed, because some of the acquisition prices I've seen thrown around are like 2, 3, maybe $4 million, but they're all in capital budget when they're done is about $20 million. So if you think about that, that's not just a value add, that's a full-blown construction project. But where the risk is much lower is it's already a cash flowing operating park, and it's already got tenants. It's already got, potentially a waiting list of people signed up who have paid advance deposits to come for the next year. Um, my neighbors said that sometimes, one of the sad things about RV parks, I mean, the RV world, is that people love the chance to be spontaneous. Let's just jump in the RV and go. The problem is often these RV parks, these last several years, are booked up and they can't just be spontaneous. So it's putting a lot of pressure on RV park demand on RV parks, and it's making RV park investors, honestly, a lot of money. So this is one I already showed you the picture in Leesburg, Alabama. I would love to go there. Have not been there yet, but you can see they have a whole lot of amenities, water park, all kinds of stuff. Um, they've got boat rentals there as well, and a marina at that one. This is one near Branson, Missouri. It's 20 minutes northeast of Branson, and it also has a whole lot of expansion. Not a whole lot done in this picture yet, but really excited about investing in this park as well. So before we wrap up, please put your questions in the Q&A panel. Before we wrap up, though, I want to talk to you about something that's very near and dear to my heart, and I believe also to Matt and Liz Faircloth. And I had not heard about human trafficking very much until about 2016. But I watched a movie called Nefarious Now, there's another new movie that came out called Nefarious last year, but this is one from 2012. And I learned that the size of the problem is massive. In fact, if you took the record profits of Apple, General Motors, Nike, and Starbucks and added those together, that's about the same profits that human trafficking generates annually. And it's horrifying. And I can tell you, I've had two family members who were not trafficked, but they were deeply affected by this type of activity. And I've watched how they've struggled. I've watched the pain that they've been through and how hard it's been for them to recover. And I can't imagine what human trafficking victims go through. So we're doing everything we can to get the word out there, but there's a problem. We don't know, a lot of people don't know how to get involved. Do I send money to somebody I've never met that I don't know if I can trust? Do I go on a SWAT team raid? Probably not. What do I do? Well, we did some due diligence and we solved this by looking for organizations that have very high charity navigator scores and that were using their money in a way we thought was, that was most economic and most efficient. And this organization called AIM, the website is aimfree.org. They actually not only rescue victims, they put the bad guys behind bars and they also get them out of the situation. They don't just put them back, so they can potentially go back on the street, but they actually give them job skills. They give them intense counseling. They give them a community. They give them food, clothing, and shelter. And they basically have where the the recidivism rate? I don't know if that's the right word, but where the rate of people going back to the streets, often young girls and some boys, is very, very high in general. It's over 90% of the folks that AIM rescues do not, which is really, really important to us. So we've been trying to do annual raises, and I want to thank Liz again for joining us in our raise on Giving Tuesday. We've raised, donated, and influenced $600,000 or more that we know of in the past 2+ years. So if you want to get involved, you could probably chat with Liz or get hold of us and be part of our matching campaign the next time we do this on Giving Tuesday, or you can just give straight to, you can look up aimfree.org. There's a lot of other great organizations out there. You might have, even in this last year, this has been really, really in the headlines because of another movie that came out last year. So Sound of Freedom was the movie. To connect with us, you can get more resources, including our RV Park Special Report at wellingscapital.com/resources. You can email or call us, or if you want to book a time to chat with me, you can do that here. I've got a few footnotes I needed to share for the different references I made earlier. And Liz, I'll turn
Awesome.
it back over to you for Q&A.
Yeah, no, I appreciate that. And when we were putting this together, and saying, what are the topics? Because we're always interested in what our community wants between real estate investing, business, and self-care. RV parks was okay. We got to talk to Paul about that. And then because we're connected to Paul, see all the good work him and his team is doing to raise money for human trafficking. That's so horrific. I mean, so horrific that we are supporting that. We said, please mention that during the webinar. Even though we're here to talk about investing and growing wealth, we're also here to stand for people. That's ultimately why we're all here. And that is such a horrific issue that's still happening across the country, in the world. So thank you for sharing that, Paul. I personally donated and will continue to support that endeavor.
Thank you, Liz.
So let's get to some questions about RV parks, because you got people's wheels turning and people are, folks are asking some key questions. I'm going to kind of toggle between, I see some in the chat, some in the Q&A. I'm going to start with the Q&A because you followed my directions and I like people who follow my direction.
All right.
So Gina, well, let's go with Caitlin. Caitlin, you're asking a little bit about what is an NPS campground? I think that was slide 16. So what does NPS stand for, Paul?
You got me. I don't know. It's slide 16.
Yeah, slide 16. So we got you.
Oh, you got me for sure. Let's see. Oh yeah, so a private campground or a national or state park would be the other type. I don't know for sure if that's what it stands for, but that's what I always thought at the bottom. It was either private or nationalized. So like if you go to like Yellowstone, they have state or national park campgrounds, but that's what I've always believed. I don't know what NPS stands for sure, and I wish I did.
No worries. Appreciate that. All right, Gina, you're asking about I gotta put my glasses on because I'm blind. I have a 34 2021 nice trailer. You rent out an RV share and outdoorsy. It's okay, but I'm sure I would love to know more about where I could send this trailer to a place where it can be rented out as workforce housing and something like that. Wondering if you can help with contacts. I'm in Boise.
Mm,
I know a great realtor agent in Boise, Gina, but any
mm.
other thoughts there?
Yeah.
Paul?
So, I mean, for years, I would have said Williston, North Dakota, Watford City, North Dakota, the oil boom there. I mean, there were 19,000 job openings a decade ago. And a lot of those people, a lot of the reasons they couldn't get those jobs filled was because there was no housing in North Dakota, and there
Mm,
wasn't enough housing. There were towns like Watford City, North Dakota, that had 3,000 people in the town and 10,000 workers visiting. So there was a huge demand there. As far as renting it into the workforce housing pool, since that North Dakota demand has, it's kind of the supply and demand have equaled out. I wouldn't know where, but I think that'd be worth certainly Googling that. And I would ask maybe even the nurse staffing companies. Sometimes nurses travel a lot and they get a certain like $1,000 a month, let's say, for housing. If they could get an RV, they could put some of that money in their pocket and still pay you well as also.
yeah. And Gina, I have your contact info because obviously you are you got these emails. I will connect you to a very reputable realtor there. I'm just gonna make myself a note. So stay tuned on that. Okay. I'm happy to make that connection. She's great. And if she can't help you, she'll know someone who can, and they'll be a good quality person. I'm just writing your name down so I make sure. All right, cool. Got some really good questions here. Can you please, Paul, make sure you share your contact info again where they can connect
Okay.
with you if you don't mind.
Okay,
Um,
great.
can you please repost the extended stay slide? I don't know if there's a question there, but yeah, please share your contact info and the extended stay slide again. All right, Sarah's asking, a lot of RV parks have a maximum allowed night stay. I've seen 2 weeks frequently. Do you recommend that versus allowing them to stay long term? I don't know what your thoughts are there.
Yeah, so it's just different models. I think one model is, there's that long stay, like 7 years or 20 years or whatever. I, I hate to admit this, but I have family who actually took an old school bus in the 70s and remodeled it into an extended stay RV. And so I think that's one model. I think that would probably be the lower profitable but lower effort model. It sounds a little bit more to me like a mobile home park, um, which is way lower effort but lower profit. But hey, there's nothing wrong with that. Um,
Mm, yeah, so
and
good.
but yeah, and if you're willing to run a business and run a big business, a big operation. The other end of the spectrum would be, of course, a destination RV park. And so, which one did you want me to pull up again?
Oh, it was the your contact, what you did, and then extended stay slide. Someone's
Okay,
asking
great.
if you don't mind
Yeah,
reposting it. And just so everyone knows that all of our free webinars get posted. It's the recording, the slide deck, it all gets posted to our blog. I put that in the chat box. So within a couple of days, you'll have access to that, and all the webinars that we've
yes.
done, you guys can tap into. Okay,
Yeah,
this is a really oh,
NPS, by the way, is National Park Service.
yeah, that's great. Okay, it's a good question. With regards to it's, Prolet, you're asking this, and I think it's a great one too. After COVID, our RV sales have slowed down and backlog is not as big. What is your thought on the outlook in the next few years?
I think it's going to continue to stay lower as long as interest rates are so high. And I thought about this. I thought, well, maybe this is not as good as I thought. But think about this. If things are a little slower in the economy, and a lot of folks are saying there's a 90% chance of a recession this year. I don't know if that's true or not, but I think that there'll be actually a little bump in potential RV stays during a recession as people choose not to do those expensive European or Florida vacations. But here's another thing. All the RVs that have ever been put on the road are still on the road.
Hmm.
So, if there were 600,000 a year sold from 2020 to 2023, let's just say there was, 1.7 million, I'm just rounding, sold those 3 years. Those are still out there and they still are going to be traveling. And so the pressure, while while RV dealerships might suffer, RV parks, in my opinion, will still do pretty well,
Hmm. It's good
especially with the
perspective.
RV share model.
What returns do you see for RV parks versus multifamily right now? I mean, and you have a
Yeah.
unique perspective because you're involved in both.
Yeah. The RV parks that are destination parks, once they're built out and stabilized, they're projecting returns in the like high teens for cash flow. I mean, just cash flow. So that's like double or triple, really triple multifamily. But there's a whole lot of work to get to that point and a whole lot of work to run that park. And that's why I would personally never do it myself. I would find somebody who's doing it and invest with them as a syndicator. But at any rate, yeah, very, very high returns for those. I would guess the lower effort parks, like these extended stay parks we talked about, would probably have lower stable returns. But my friend who owns one said he's got like a 7 year waiting list and almost everybody
Wow.
re-ups every year. I would guess he could raise his prices. The extended stay to me sounds a little more like a mobile home, a luxury, not a luxury, but a kind of a wealthier person's mobile home park. And, you can
Yeah.
raise prices and people aren't going to leave. They don't want to leave their deck and their awning and their shed behind.
That's really good perspective. Are we going to receive the direct link to the RV resource? When did you share RV resource? I missed that.
Oh, I can share that right now.
Okay.
The direct link to that I didn't put on here, did I? Yep, it's the top one right here.
Okay.
Oh,
Cool.
yeah, wellingscapital.com/resources.
I don't see this as a question, but I think this is a really valid question for probably a lot of the folks on this webinar. It, when you're exploring a new niche, Paul, and firsthand, it's about mitigating risk. Like any savvy investor wants to mitigate risk, and we know if you're shifting or pivoting into a new asset class, there's a learning curve, right?
Right.
And you want to minimize that learning curve with less time and less money, so to speak. So, what would you say are like one or two like steps to take as folks are really exploring this as an asset class? There's obviously a very active part about this. There's a business piece. It's not just you're buying.
Mhm.
There's so it's a business and as an investment. So I'm curious to get your insight. Those like what is those we always talk about like moving the needle in our community, right? It could feel very big. Like, okay,
Yeah.
we want everyone to leave this webinar, to leave this session, to say, okay, what's one thing, one action I can take to explore and kind of move the needle if this is something I really want to take part in and explore further. So what would you say are some one to
Yeah.
two steps that simple steps that folks can take so they feel like they're taking getting momentum moving and versus just, oh, this was really interesting and I'm not going to do
Yeah.
anything with this.
So, the less mature industries or asset classes have the least information. It's more pioneer. I mean, when I wrote a book on self-storage, I don't think it was one of the very first, but I could only find 5 other ones out online and they were mostly self-published with typos and things.
Sure.
And so, by the way, my second book had a typo. I spelled Warren Buffett's name wrong. That was nice. But anyway, seriously, and that was self-published. But at any rate, I'm a real big believer in The One Thing, the book by Gary Keller and Jay Papasan. And, they say just stay heavily focused on one thing and do it really, really well. And that's why I love investing in syndications and funds because it lets someone else do all the heavy lifting. All I have to do is due diligence the sponsor and the deal. So one thing I would say is use the same tools you would like, Brian Burke's book, The Hands-Off Investor. I would use that to diligence an RV park syndicator or fund manager and, invest with them. However, if you're thinking about doing this yourself, you've got some land or you have access to land and you think you might want to do this, honestly, I think there's very few resources out there because it's not like, like the National Multi-Housing Conference is going on this week. People pay 5,000 to go to that, 5,000 a year for the membership or more, and they go to that and it's like a big show. There might be RV shows and there are, but RV park, I don't know if there's a lot of resources out there. I would say go to a park, rent an RV from RV Share or Outdoorsy, or talk to Whitney and, talk about her experience. And, think about just trying to learn more, maybe by being mentored or finding a park owner who would tell you everything about their business. I mean, I don't think there's a lot of books and resources out there, and that makes an exciting opportunity.
Yeah, no, that's an interesting point. I think the other thing you mentioned that does get overlooked is there's such an active part of this business and there's a passive part. And there's a lot of people
Yeah,
probably on this call that have some financial resources they want to deploy, and they're just not able to get into some active deals because the numbers aren't penciling out, especially on the multifamily side, because
I
that's
know.
where I come from, right? We haven't bought a multifamily in over a year for that very reason. So that's a real, people want to deploy their cash, they want to deploy their investments, and they're like, these deals aren't penciling out. So if
Yeah,
you do have some investable cash, I think what you're saying, Paul, makes sense from the perspective of what operators do I really can I vet? Can I really
yeah,
have a sense of trust with, and really obviously due diligence on them. But
yeah.
you can learn a lot from people being the operator, because then you're
Mhm.
kind of passively investing, you're learning from them, and then you
Mhm.
can maybe take some of those pieces so you can do it on your own as well.
Right,
It's kind of like the best of both worlds.
right.
I would say do that in an asset class that you're very interested in, versus, unless it's a smaller, you want
Right.
to mitigate your risk, to what
Yeah.
you're saying, Paul, right? And that's a way to mitigate a risk, is to kind of learn under someone else's,
Yeah.
efforts, if you will.
I'll say this right now, hands down, if I was going to look for an asset type right now that I wanted to jump into full time and be the operator, the syndicator, I would, of the 7 asset classes I know a lot about, RV parks, hands down, I would do that. In fact, my son has a lot of land in Southwest Virginia that he's, bought and acquired and timbered and things like that. I've told him, you're missing a huge opportunity, here to, maybe set up one as an overnight RV park with minimal amenities. But anyway,
Yeah, no, I love that. And especially from an operator perspective, I know Whitney very well. She's a friend too.
yeah,
So might be a good, she's actually going to be, for those coming to InvestorCon, we're going to have a panel on alternative investing. And we're
good,
going to have someone talking about stocks. We have somebody talking about buying businesses. A woman has got a couple, like a plumbing company and this
yeah,
company. She's bought a couple businesses. We're going to talk about that. And then Whitney's going to talk about car washes and also RV parks too. It's just another
great,
alternative type of investing. But she's in our community, folks, so I can get her to come and do a webinar as well. She's great.
great,
But everyone, I think the key is to take action. We always want, anything we do is to take one action, so you are moving the needle towards your goals. That's really important to us. That's literally why we have this community. It's not because I've literally nothing else to do, Paul's nothing else to do, we're looking to hear ourselves talk. Really want you to achieve your goals this year. That's what we stand for. So I'd love to hear one takeaway. What did you learn? One learning and one action you're taking as a result of today's webinar. That would be music to Paul's ears and my ears, because that's what this is all about. you know, that's literally what the purpose of our community is. So the needle is moved and you achieve the goals that you set out to, and we're here for you. And that's why we exist. So I'd love to hear, one learning, one action. I expect all the 65 that's still on here to share, or I'm not getting off until I see everyone's action steps. I'm going to hold you accountable.
That's great.
I want to see some action steps here posted. But thank you again so much, Paul. Appreciate your time. Appreciate your expertise. And folks, you're looking to give back. You know, the human trafficking is a really really powerful way to do that, because it's pretty detrimental to so many people.
Yeah.
So very cool. Following up with the call with Paul. Well, that's a good follow up. I wasn't aware of that. Learned about the different types of RVs. Great. Explore aimfree.org. Very cool, Tracy. Thank you, Liz and Paul. My husband and I purchased our first park a year ago, and this was very affirming. We will continue to invest in it and master the operations. Awesome, Christina. And then we'll have you on to teach about it, Christina.
That's amazing. So, congrats, Christina. That's
action.
amazing.
I will look into building a list of mom and pop to start contacting. Very cool, Jenna. That's one of the best opportunities right now. You got it, Christina. Keep me posted. I mean it. Very cool.
Hey, I just thought of this.
Paul, appreciate you very much. And thank you everyone for being on. Our next webinar it's all on therealestateinvestor.com/events. We put these on twice a month to add value to all of you in your journey of investing. So thanks again for being on.
All right. Thanks, everybody.
Bye, everybody.